This episode is brought to you by The Guarantors. Facing rising renter fraud? Don't let fraudulent applications compromise your financial stability. The Guarantors provide a safety net that protects your rent roll and minimizes bad debt. Why risk it? Talk to The Guarantors and secure your property's financial health. Visit theguarantors.com/multifamily today. Before we get into today's episode of Multifamily Collective, I wanted to give a shout out to Chris Kira. He is a part of the Multifamily Media Network. Chris hosts a podcast called Beyond the Work, Tales in Multifamily Maintenance. And if you haven't heard Chris's podcast, I really encourage you to head over to Spotify or Apple or even on YouTube. You can look it up. Beyond the Work, Chris Kira shares some incredible stories across the service industry. Okay, jumping into Multifamily Collective today, I wanted to talk about an article that I read in the Wall Street Journal dated today, Election Day in America. The headline goes, "America's empty apartments are finally starting to fill up." So 1.2 million units have been built over the last 2 years, and the Sun Belt has taken a real hit. Markets like Austin, Phoenix, Tampa, certainly Atlanta, Georgia, just a prodigious amount of units that have been delivered into the marketplace, and absorption has been, in Austin, it's been terrible. I think the vacancy rate in Austin right now is a 15% plus minus. And in some of the other markets, it's historically been 95 plus minus. It's been in the lower 90s, sometimes in the upper 80s. So the neat thing about this article is that it is suggesting that with 672,000 new units that have been completed by the end of this year, calendar year 2024, half of that number is expected to be delivered in 2025. So what you're seeing is continued historic demand for apartments, and this absorption, sort of the speculation that absorption is going to pick up even in these Sunbelt markets. You're going to see a leveling out of occupancy and a return of a little bit of pricing power. That is the potential to raise rents a little bit in 2025 and more so in 2026. What has not suffered as much, but has certainly not been on the rocket ship that it has been in the past, is renewal rates. It's suggesting that across the country, 3.5% increases across renewals. That's been a pretty good thing in the sense that there is still some pricing power on the renewal side. And that what is really driving that is that you have this inability to purchase homes in America. The pricing or the affordability to buy a home is off the charts right now. So you don't really have people escaping the apartment experience to go and live in a home, certainly not in volume. But nonetheless, we see vacancy rates sort of stabling off or becoming stable rather. And I just finished today by sharing this quote that was given by Joe Fisher, the president of a publicly traded apartment owner, president of UDR. Probably the biggest story of this year that we've seen is from people coming in the front door and not leaving out the back door. So renewal retention rates have been up historically. In some cases, but certainly in a stabilizing way to the industry. Once we get through this absorption period, you'll start to regain some of that pricing power. There aren't as many starts happening in 25. There's deliveries and or starts, and certainly that'll impact 26 deliveries, where we will probably continue to see a rise in our ability to have some pricing power in the space. So survive 25 and things will take off in 26, but there will be a lot of shakeout between now and that time. It's an exciting time to be in the multifamily industry. So that's it. Take care on this election day, and we'll talk to you again soon.